Welcome back. Now, from supply chain disruptions to geopolitical tensions, the business landscape has become inherently unpredictable. My colleague Vamakshi Dhoria recently sat down with Brandon Spencer, the president of ABB's motion business area and member of the group executive committee, to discuss how the company is navigating these challenging times. Listen to a slice of that conversation.
Overall, ABB is navigating the challenges well. You know, we're very diverse in terms of geography, and we're very diverse in terms of industry. So we really don't have any industry that represents more than, say, 15% overall of our overall revenues. And so that allows us to kind of ride the waves a little bit smoother than some of our competition. We also have a very local for local strategy, and so I'm sure we'll talk more about that while I'm here visiting with you today. But kind of those things combined, along with being a technology leader, have really allowed for us to navigate well so far.
Well, absolutely. And are there any particular segments wherein, customers are sort of hesitant to place orders? Are there any sort of delays in terms of investment decision makings or, project timelines? Are you facing any sort of challenges in some segments, if you can highlight that?
Sure, we see some of that. I mean, it's not too atypical, I would say, in the large project business. A lot of our heavy industry clients, whether it's mining, whether it's marine, oil and gas, et cetera, they go through these periods and they have final investment decisions that they take, and that depends on a lot of things that are going on in the macroeconomic environment as well as the geopolitical environment. And so we do see some delay in some things with a little uncertainty with tariffs and some of the trade things that are happening. But we also have really robust pipelines, I would say. So I think there may be a few things in large orders that are a matter of timing, but overall we feel pretty secure in what the pipelines look like, and that ultimately these projects will go because really the society needs for them to go forward with more energy consumption, more overall consumption, and so obviously we're serving some of those industries that support that.
You mentioned about tariffs, and I have to ask you about the US market because it is quite significant for you. Now with President Trump's big, beautiful tax bill, which could potentially reduce or eliminate clean energy tax credits. Of course, we do have the threat of the reciprocal tariffs playing out as well. How are you realigning your strategies for the US market then?
No, I mean, I think our strategy has stayed consistent and really will stay consistent. We have a local for local strategy, which I mentioned earlier. So if you look at the U.S., 75–80% plus of what we sell in the U.S., we make in the U.S., especially if you include Canada and Mexico. Those percentages are even a little higher. India, 85% plus of what we make in India or sell in India, we make in India. Europe, 90% plus. China, 90% plus. And so for us, we're very heavily invested in the markets that we serve, the customers that we serve, and being local for local. And so the tariffs create uncertainty. We believe in open markets and free trade, certainly. But the long run, I think, we still see that a lot of these projects and customers will move forward with some of the spend.
Well, does the big, beautiful tax bill then pose any sort of threat to you because of the clean energy tax credits then?
Yeah, again, if you go back to our diversity that we have across industries, we support renewables. We have some big customers that are executing geothermal projects, for example, in the U.S. that are continuing to make that investment and go forward. Our oil and gas business, LNG, is a big export business for the U.S., and we see some of those projects going forward. So because of the diversity of our business, again, I think we can kind of ride through the cycle and then make sure that we're focused on providing the best technology, local resources, local execution in order for them to execute whichever type of energy value stream goes forward.
Absolutely. So you're saying you're largely shielded from these sort of uncertainties that play out. But, I'd also like to ask you about the European side of the market because right now there have been a couple of changes. Of course, there's higher defense spending, but there's also increased focus on energy efficiency as well as investments in some other utilities then. So what does this spell out for you, especially in the European market?
In the European market?
Yes.
Yeah, I mean, the European market's been down a little bit, certainly tough, but it's also very regional. Northern Europe for us has been strong. We've seen a lot of investment in Northern Europe and the business going well. There are some slowdowns in places like Germany and other countries which have dependency on other parts of the world for export. But overall, we've seen it stabilize, I would say, a bit across the last, say, 6 months or so. And so hopefully we continue to see those patterns develop for us in Europe. Obviously, that's the home of ABB. and a large employee base and manufacturing base. And so, we certainly hope to see that bounce back up here a little bit in the time to come.
So we've spoken about demand in the US market, we've spoken about demand in the European market, but there is one sort of supply side concern that is now creeping up, and that is actually from China, because you must have heard about this. There have been curbs on the rare earth elements that have come from China. So is that a critical element for you, especially in some of these high energy efficient motors like IE4, IE5? Does that sort of put a strain on your production lines?
No, it has not really. I mean, we focus on the metals like copper, aluminum, steel, these kind of things. And so there is a global supply chain of that's not completely dependent on one country like China, for example. We've also innovated in our technology. So we have a synchronous reluctance motor, which gets away from rare earth metals in order to still drive high efficiency. And so it's kind of a combination of other metals that we're focused on and then innovation that we have in our products to make sure that we don't have to consume those.
I'd also like to understand something about your robotics division, because in the board meeting that had happened very recently, you all have decided to spin it off and list it as a separately listed company. So could you help us understand what is the kind of rationale that goes behind this decision?
Yeah, our robotics business is one of the strongest robotics business in the world. It gets combined and consolidated with the rest of ABB. So it gets compared to businesses that aren't as similar to that business. And so we think if it's standing alone, that business will be very attractive to capital because of the returns that they provide, the market leadership position that they have. And so we believe the access to capital to be compared fairly against other motor competitors and really shine is an opportunity for the robotics business. We've loved having that business in ABB, and we'll see when that time comes and what it looks like. But I think for the robotics business, it's a real positive and viewed that way. There's also not a lot of synergies with the rest of ABB. So they are fairly standalone in terms of how they operate, what equipment they use, those sort of things. And so I think it's kind of a case of even better if. If you look at turbocharging, which was in ABB, and we spun that out, that's done very well on the open market for their shareholders, for that company. And so sometimes it's just the right decision to make.
But an interesting, well-rounded conversation on ABB. For the Nifty, holding on to 25,100. But some stocks like Bajaj Finance and Finserv are seeing a bit of profit booking. Holding smart, so Bajaj Finance is still up 2.5%, but there has been a bit of a come-off in these names. Realty, on the other hand, has nudged its way back into the green. It was one of the few sectors where you had a red tick, but now it's back in the green. And in the mid-cap end of trade, as we highlighted, Hormuz was talking, it's the PSU banks, it's the NBFCs, which are ruling the markets on the way up. Bandhan Bank, Edelweiss Financial, IREDA, RBL Bank, JM Financial, Bank of India, Bank of Maharashtra, Manappuram Finance, across the board, big, solid gains of about 3 to 5% coming through. Steady so far, the last hour and the day, the morning. That brings us to a close in trading hour. Thank you very much for watching.